Welcome to Power Charting. Is the Dow Jones Industrial Average ready to run? Very interesting place in the Dow Jones. We've been talking about it for the last couple of weeks. I have a recent blog that we're going to review here briefly. Also, the gold miners are in a very interesting place right now. And so let's look at those. And then we're going to turn our attention to stocks to watch, not only stocks in the Dow Jones, but others that have a really interesting positioning to them at this time. I spent years and years getting lots and lots of chart books. Love to carry them around, look at them. I could spend just hours just immersed in these different chart books or as I marked them up and wrote notes on them and compared time periods and so on. Absolutely love the stockcharts.com charting platforms. They're fantastic. And I really appreciate having those. I do have those nostalgic moments where I really like to go back and just go through pages and pages of charts. So today, with the power charting episode that we're going to do, maybe we're going to harken back to that period just by looking at a bunch of charts. And I can't think of anything that I'd rather do. So this episode is just all about me. It's what I want. I want to look at lots of charts, and I see a theme here, and I hope that you can tolerate this. So anyway, let's have some fun and do this. And also, I'm going to use my little pen thing here. And so I may be fumbling around a little bit, but here's today's agenda. Gold miners index. Let's take a look at that. Let's look at the GDX, which is an ETF of the gold miners. And then let's look at the Dow Jones Gold Miners Industry Group. Turn our attention then to the Dow Jones Industrial Average and the very interesting place that it's at this point in time. Talk about the pros and cons for having a run from here in that index. And then let's look at some of the stocks that I think are particularly interesting at this time in the Dow Jones average. And then conclude looking at those and also other stocks that are not in the Dow Jones that are also interesting. So if we look here, we can see that this is the Gold Miners ETF, GDX, and this index has a really well-defined reaccumulation structure that goes all the way back to 2016. So right here, there's a buying climax. And so you can see that here, then a very sharp reaction, sets a range-bound condition with a resistance and a support area. Tell me that this isn't just the ultimate, most valuable technique in all of Wyckoff, is just the simple act of drawing resistance at the buying climax, drawing support at the automatic reaction low. Look at how well this contains a decline, which is a thrusting action below the support area, which then is rejected and reversed in short order, takes it right back up to resistance again. And then this is the spring, maybe call it a shakeout, but we'll call it a spring. The spring is a turn back below support, which cannot hold at the 2020 March COVID low, and then a very dramatic advance up to the high in August of last year. So this whole period here, all the way across, is almost a year in duration, and it's been a long, trying period for people that like to trade the gold miners. And in fact, most traders have abandoned this place and have moved on to other areas that are more productive. So this, though, as you can see, is a very large causal structure. And so you have a huge potential count here. You have a count here. Today, we're going to focus on this area where the yellow shading is and take a some kind of an estimate of the potential for a count in this area and see whether or not we can identify an important opportunity. Part of the reason that this is being talked about today is look at the last bar on the right here. Look at this. This is today. A little bit started yesterday, actually, but today, very good day. It appears to want to reverse off of a dull, quiet reaction, which has the appearance of a last point of support on this chart and the possibility of a rally upward towards the high, the prior high a year ago, and maybe new highs. So let's have a look. So here's the point and figure chart. So this is just a little trading chart on the lower left for GDX, which is 30-minute data, intraday, one box reversal, 0.17 ATR scaling. So here you can see this little count just goes right back to July 16th. This is 17 columns times 0.17, just gives us 2.89 points of cause, which takes us up as high as 36.38. This is above this resistance area right here, and also would be some kind of a sign of strength here potentially, and then for higher prices. Well, here is that area that we just looked at on this larger chart. And so this is the decline off the August 2020 peak. So this is like a shoulder and a head and a shoulder, which we don't use in Wyckoff, but we all understand that concept. There's a sign of strength here. And so you can see that this pullback has gone down to exactly the area of this sort of a climactic low, which set a low and a support area. It's gone to that. We count this across 28 columns, one box reversal method, ATR scaling 0.83, and we have a count potential of 23.24 GDX points upward. Wow, this takes us to a new high. And so it could take a while for this to happen, but the potential here for higher prices is very exciting. And so let's see if we can get this kicked off. And so turning back to this area, you can see really big bar here. And then we would like to see it's up to the downtrending long-term moving average, which might be resistance. But if it can get above that and start to climb upward, taking out this high and then getting up to this high, then clears the way for that new high in the area of, what did we say, 56, 56.44. So a lot of potential in this rally, but also getting to new highs puts into play this whole causal structure here, going all the way back to 2016. Pretty darn interesting. And also look at the big base in the relative strength. Well, what we need to see in this rally is the ability for relative strength to now get above this long-term moving average, turn up, get above it, and then stay above it and start to have a long-term upward trend like from 2018 to 2020. So this is interesting potentials for the GDX, and we're going to come back. Oh, well, let's just go there right now and have a look here. And this was a chart that was initially submitted. I redid it with a comparison of the GDX here, but this was submitted by one of our contributors at Wyckoff Associates, and he did a wonderful job. This is pretty much his labeling, and so all due credit to him. And this is the Dow Jones industry group of the gold mining index. Notice the difference that we have here between the GDX and the gold mining index. There's some more constructive bullishness in the gold mining index than there is in the GDX. So notice this rally here And so here's potential phases. Phase A, stopping of the advance. Phase B, big trading area with an upthrusting action followed by a last point of support. This is much more of a bullish structure than the GDX below it. That's very interesting. So here you can see again this good strength uh, coming off of this pullback to a potential final low. It may not be, but in the LPS here, this area is a higher low than the low of call it the left shoulder. And then also notice that this rally goes up through the resistance area before rejecting that resistance area and turning back down into this last point of support. So this is such an interesting contrast between the gold mining industry group and the GDX. And so let's just keep an eye on this. And thank you to our wonderful contributor for contributing this really nice chart. And you can see here that there's a really beautiful reaccumulation structure in the gold miners that very well could turn to a new uptrend in short order. So here you could get the GDX up to this 40 level and have a rally to this level, which is well below the August 2020 high. And at the same time, the gold mining index might actually get to a new high at above these prior peaks. And so that would be, I think, very interesting and clear the way for an important new uptrend to begin. Okay, so now turning our attention back to let's just start by making a comment. I showed you this chart 2 weeks ago, Nasdaq 100, beautiful chart that Ramon had put together back months ago, and actually in 2020. This is the COVID low right here. Original accumulation gives us a count that goes up to 15,400 to 16,100. So this accumulation structure is still in play and still has higher objectives from where we are right now. And so this is a beautiful accumulation. And look, this comes at an area of around 74, 7,500 on the count line, and it's counting to more than 15, 16,000. And so tell me that point and figure analysis isn't just a wonderful tool. And then here is a reaccumulation count. And this reaccumulation count confirms the accumulation count, 15,800 to 16,700. So there are higher prices ahead. And here is where we were on the futures as of today, just so we can compare apples to apples, because this was done on the futures market. 15,044 today, and the markets have recently closed. So this should be pretty close to the final price. It's not the close. And then you can see that there is still much room to run for the Nasdaq 100. So we're continuing to look to higher prices ahead. Now, here is the Russell. And so with the Russell, here is a point and figure chart. Notice what happened with the Russell is that this low right here was taken out and was a minor spring right here. And at this point, and it turns up, it's had a test here. Now it's pivoting. And so you can see the pivot. It's attempting to now work its way up to the resistance area. This is very constructive. This is Chaikin money flow up here. And it's, look at how it's been persistently green throughout this whole area. So there isn't a lot of red, which would demonstrate supply showing up in long-term in the IWM. So this is somewhat constructive. But more importantly is we're going to see whether the IWM, the Russell ETF, can make its way back up to the resistance area up here at around 230, 232, that area, and then from there be able to then start a new important uptrend. Just this first segment count here, and we'll keep looking at this over time, but just this first segment count goes up to 246. Okay, so I'm completely running out of time here. I showed you this chart 2 weeks ago, and this chart was the Dow, and it had pushed up into this resistance area, and there was a number of breadth divergences and so on, bullish percent, that were troubling at that time, and we had talked about the idea of a possible reaction. Well, in fact, that's just what we got. So here's the chart at that time, which you can see it pushed up to resistance at the buying climax. Look at these beautiful throwovers. Got right up there. Well, and then subsequently, and I'll show you what happened since, but subsequently it did turn down really hard, but something good happened. And that is, here's the decline. This was that 900 point intraday decline. It didn't close down 900. This is a 60-minute intraday chart. Here is a low that was put in. This is often how last points of support will happen, is that you'll get a really sharp decline that is a short-term shakeout, which immediately is reversed and it turns back up. Well, this is a very interesting conclusion because look, it didn't even get down to the support line, and then it started to consolidate. And we said that what it needed to do was to consolidate in a tight, narrow range at resistance and show no capacity to come back down again, which shows that stock is in strong hands. And this shakeout was the final attempt to bring forth supply of stock that the large institutions and large composite operators could buy. And so here we are, very tight range. This is exactly where we're at. Here's that decline, which gives us a new perspective on this. And here is a count that we can take. Takes us up to 37,867. And this 37,867 level is a substantial move. So what we need to see happen here is to have a consolidation and then a movement up and out of what is a large reaccumulation area. So this blog is a blog that I wrote about this very phenomenon on July 24th, and I encourage you to go read this. But here's a little schematic of a reaccumulation. And so here is the process of finally developing a cause for a new advance. So developing a cause here for a new advance. And so now we're seeing an attempt to consolidate at the 35,000 level and then have follow through from this. That's what we need to see, not to see a turn back into the structure again, which it could do, there's no question. Also notice this sharp reaction down. It's just 2 days, but the reaction goes right to this really useful long-term trend channel, oversold line of the channel right here. And at the LPS, it goes to the channel, slightly takes it out as it did here at support and on the secondary test and turned back up. And now it's moving up rather briskly to resistance. And then here's a point and figure chart that we took, which this is a daily chart, 100-point scaling, counts right up to the same area. I just took to the low on the last chart, and here's a range 38,300 being off the count line right here. So there we go. And so the Dow looks particularly interesting. And we want to get into some of the stocks that are in the Dow and other places that could be of interest to us. And so let's turn our attention. I'm going to pause here for a sec because I want to change screens. We will start with Honeywell International, do a few Dow stocks, and then move on to some others that look really interesting in the time that we have left. And so here, in the case of Honeywell, there is a broadening type structure here in Honeywell. And as it ran up, here's the last point of support, pullback, and a run up into this area where it's really become somewhat dull and is pausing at this area, looks poised to have a jump out of this area and resume its upward stride. Also, I like to look for accumulations in the relative strength. That's, I think, very important. It's now threatening to get back above the moving average. This is a daily chart. And so if it can do that and start to turn the relative strength upward from here, especially with this really tight backing up type action, I think that's really constructive for higher prices for Honeywell. And now the next one, Boeing. So Boeing has been relatively weak, and you can see that in the relative strength here. And so the relative strength has been making a series of lower highs and lower lows, and that is, you know, when a stock is doing that, just stay away from it. We want to see upward trends here, and with that comes good participation by institutions and higher prices. And so here we have something that is pretty interesting. We have a climactic decline that has shaken out this key prior low, now a turn sharply back up into the structure. So we have a form of support here, we have resistance across here and here. And so we would want to see the ability of Boeing to be able to work its way up to these two resistance areas. And so this very well could be an important shakeout and then turn up. And so this is more of a trying to catch a bottom, as was the case here. You can see that where it shook out the low and then turned up and had a nice run for a couple of months. Okay, so there's that. Caterpillar. And so Caterpillar is sort of like what's going on with Boeing. Part of what I like about these stocks is they are institutional in their nature. I mean, institutional, but also all the Dow stocks are institutional, but also industrial. And so there's a industrial theme at work here. Here's a spring of this low. Now Caterpillar is trying to work its way back up. You can see the relative strength has been sliding lower now for a couple of months. And so we need to see Caterpillar, the low risk juncture down here was the low in the test. And now we want to see whether or not Caterpillar can work its way back up towards the highs, which would be very constructive. So again, this is the industrial theme at work. Chevron's another one. So here you can see with Chevron a break below that low and then immediately a reversal back up into the structure. That's important support. You can see classic resistance off the climax high. And so a rally up to the climax high would be really telling. And then this would create a phase C test and then a phase D advance up to the resistance area. And so, and then one final check of the relative strength, we'd want to see it get above this downtrending moving average and get that going also. Dow Holdings, look at this, two key prior lows, a shakeout of the low here. Now it's attempting to turn back up. It's back above these lows again. Pretty steep ascent as it's working its way back into this structure, and that would be potentially some kind of a pause, and then we would want to see Dow having the ability to get back to the prior highs around 70. So we'll keep an eye on that. Travelers. So Travelers, in my mind, because I don't want to just show you stocks that I think have the potential to maybe lift up into, but look at Travelers. Here's a rally. This is a rally that is a rally uh, sign of weakness, which all these prior stocks with their spring had. Turn up, now an attempt to come back down again. So this is potentially a test. And so this test would be a attempt to hold that low. If it doesn't hold this low, then this is going to look a lot like distribution. And so we're going to keep an eye on that because Travelers is an important insurance company. We know how low interest rates are. And so we'll keep an eye on that. Coca-Cola. Coca-Cola is really interesting. And so you can see here that the attempt to get above the moving average, it's trying to turn up and start to build a higher low, so to speak. And this is a new high in Coca-Cola. And so that's really an interesting advance. I think it looks quite interesting, as does other stocks in that group. Cisco. So Cisco's gone up, made a minor new high, and so has a good yield. And so here it's rallied up to the moving average. This is an important place because it needs to be able to pull away from this upward sloping reaccumulation structure and get going here, which would also pull up the relative strength. We really need the relative strength to be doing this, where it's going up and up, because that's what attracts institutional funds. CRM, this is really interesting. This is a possible large accumulation that goes back to December. You can see, look at that big gap down, climactic low here, sort of slides down to this area in early January. Here's your automatic rally, which is a resistance area. So climax, automatic rally, resistance. Look at how CRM is able to consolidate in its relatively tight range after an important rally from the May low. And so this could be a backing up action and minor LPS here. And then we need to see this turn up and get above this resistance area. So very constructive, and also look at the base and the relative strength. So I'm really intrigued with CRM here, and that is a Dow stock. Peloton. Peloton's really kind of interesting. I'll just show you this chart for now. There's a base in the relative strength, resistance up here around 125. And so it's made a lower high at this point, which I think is a point of vulnerability. May have to go back down to the support. But if it can hold in this area and then turn back up, this might be a cause that's near completion. Also a beautiful little distribution area here. And there's Peloton point and figure chart. You can see the beautiful basing type causal structure there. And then last one today is FIVN, and you can see here beautiful base in the relative strength. It turns up and it's attempting to jump out. It has a little bit of a tail here, may have to pause, back up some. Want to see it be able to stay out of the structure, but this looks like nice accumulation in FIVN, and a nice rally off of the early June low. So looks like it might be completing an important accumulation structure. Here is a cause. Look at that beautiful reaccumulation cause, and look that that follows an important uptrend. So often uptrends are interrupted by a pause and then a new uptrend. This could very well be happening right now. And so with that, I will say so long. Thanks so much for being here, and we will see you next time.